But let's welcome another perspective. Mehrab Irani, General Manager for Investments at Tata Investment, is joining in right here in our studios. Mehrab, morning. Thanks so much for taking the time on. And it's been some time since we last interacted. Well, what's it looking like in terms of market earnings season about to kickstart? Any key expectations? How are you viewing the market in the near term?
Yeah, good morning, Priyank. If you see the markets, 2014 was a very good year for the markets.
Yeah.
The Nifty gave more than 30% return. Even for politics, it was very good. After 30 years, we got a stable government at the center.
True.
For economy also, it was very good. If you say interest rates like 10-year GSEC came down by 100 basis points during that year. Even inflation has been coming down. WPI is almost 0%. And also oil prices came down towards the end of the year by almost 50%, which is good for India as a country over the medium to long term. So, but 2015 has started on a little somber note if you think world over also. And what has been happening that there is a scare of deflation globally. The dollar has actually been strengthening a lot. And what I feel that people think that dollar is strengthening more against the euro in emerging markets. But what I feel that it is actually dollar is strengthening more against hard commodities like say oil and steel. Okay. The liquidity which was flushed into the system since 2008 financial crisis has actually not been able to propel investment demand globally. There has been good consumption demand of globally, say cars and say luxury items and housing also, but not investment demand, and that is what now we are seeing which is happening globally. As far as India is concerned, the earnings season is obviously going to start now. My expectation is that this quarter will be slightly muted. If you see last couple of quarters, the analyst expectation have not been met.
You know, Mehrab, what? I just got 10 seconds to go. I'm going to come back and get your point out in terms of the way the earnings season could really play out. But we just get the market opening as well. Let me quickly mention the way the markets have opened in terms of the kind of numbers and the kind of levels that we're actually tracking right now. Pre-open was suggesting a 50-point gap up on the Nifty. 190-point gap up is what we're seeing on the Sensex. Straight away today, Wipro, Sesa Sterlite, Tata Steel. This is a big one in terms of earnings today. 0.5% higher. ONGC, RIL and ICICI Bank are a couple of the counters that are in positive. HDFC Bank, GAIL, DRL and Axis Bank all showing good strength. 200 points now on the index. TCS, you got green across. All 30 of them now in positive on the Sensex is what we're tracking. Let's get the Nifty going. Mention that one for you as well as far as the Nifty is concerned and how it's shaping up. Let's get that up. All right, the Nifty now at 8294. It's been around that 8300 level. And majority of the stocks in positive. In fact, all of them probably on the Nifty as well. Just we'll just refresh that. There you go. HCL Tech is the only one that's tad bit lower. Tata Steel, Tata Motors, Kotak Mahindra Bank has been cheering that merger there, or rather the approval. DRL and ONGC also seeing decent traction, and 59 points up. 82.92 is what we're seeing in terms of the opening itself. In fact, let's go back to our conversation with Mehrab Irani, who's been joining in this morning. Mehrab, you were mentioning about the earnings season. Go ahead. I'm sorry I had to button because of the market opening there. But you were mentioning that this earnings season is going to be somewhat to watch out for. The key factors and what one needs to keep an eye out for.
Yeah, if you see, I think this earning season, the earnings will be slightly on the muted side. I think top line growth may be around closer to 5%. There may be a 60-70 basis point expansion in EBITDA margin because of oil price correction and also because of rupee depreciation, which will help. But I think if you see last year, since the Nifty had grown, also went up almost more than 30%, while the earnings growth was only 14 to 15%. So the valuations have been slightly about 10 to 15% above the long-term averages. So that is one factor which we have to watch in the current year.
Alright, so that's as far as the earning expectation are concerned, but the big theme obviously that everyone's keeping an eye out for is the financials and the way they're expected to benefit in terms of what you were mentioning earlier as well, maybe in terms of the way the yields have been playing out, maybe in terms of the way you finally seen some bit of movement coming in. Your thoughts on the banking pack?
Yeah, I think yields have decisively moved down. If you see secondary yields, the 10-year GSEC has almost come down by 100 basis points. 65 basis points was in this current quarter itself. So I think that will give a good trading gains to a lot of the banks, particularly the PSU banking pack also. However, long term, if you see structurally, private sector banks are looking still quite good. I think they have managed the interest rate cycle very well, and NPAs are under control, and they are looking quite good. Even the housing finance sector, I think, is looking very interesting at this point of time.
You know, beyond that, the other interesting bit has been some of these auto names. Tata Motors today up 1.3% is what we've been tracking. We'll be getting you the management of at Tata Motors also in a while from now. But Mehrab, any thoughts when we talk about the auto pack and how that could really shape up?
Yeah, I think the auto is also looking good. If you see last week, the numbers which had come down, like for CV cycle, also I think is decisively now turning. The freight rates have moved up. Even the stock at the dealers have come down. So the CV cycle I think is turning. The two-wheeler numbers have been very good. The scooter growth has continued to surprise everyone on the upside. And even if you see on the passenger vehicle numbers, they were exceptionally great. So I think the auto pack overall is looking quite interesting, and the demand will continue. And with the fall in interest rates, I think the demand may further pick up also.
I want to quickly mention some of the mid-caps buzzing in trade today. NBCC is up 4.2, Shoppers Stop up 4, Bank of Maharashtra doing well as we can see 4%. Pippa Defense was shot up almost 16 to 18% yesterday. That one's gaining today as well in terms of the way trade's panning out there. So that's the other one that's buzzing. HCC, good volumes coming in today. So that's the other stock that's on the radar and that's showing some strength. Dish TV up 3.5%. Again on back of heavy volumes that we're tracking there. HDIL up 2%. NCC again 2% higher for that counter. Brigade Enterprises is the other stock that's up 13 to 14% in terms of the way trade is panning out. SpiceJet spiking a little bit today. There's some commentary coming in regarding the fact that they could actually be working with probably infusing some funds by Jan 8 or 10 is what they're saying. That's got the stock up almost 10% it seems, and good volumes once again on the stock is what we're tracking right now. But beyond that, let's talk about some of the other stocks and sectors that are in focus. Mehrab, we've been talking about the top picks so far, but anything that you'd like to avoid in the market, because in this recent bit of recovery, there are very few spaces that still haven't really performed. But anything that you don't want to have in the portfolio, you want to avoid right now?
Yeah, I think metals would be one of the sector which I would stay slightly underweight. Even the oil and gas pack, I think because what is happening globally, and I think those two sectors, I don't think they were underperformers last year also, and I think they will continue to underperform in the current year also.
Alright, so that's as far as the metal pack is concerned and the way it could really shape up there. But the other interesting bit has been, what we've been tracking on the pharma space as well, because we spoke about IT earlier in terms of how earnings would shape up. Any thoughts on some of the other exporters like pharma?
Yeah, I think pharma sector is looking quite interesting. However, the US FDA has become very vigilant currently, and a lot of companies are getting affected. So we have to be careful on which company we are investing in. But overall, yes, the pharma theme I think remains very strong, and that will be one of the sectors we would continue to remain overweight in 2015 as well.
Okay, so that's as far as the pharma pack is concerned and how it could really play out there. Just want to mention some of the gainers, because markets now at 8,300 is what we're tracking on the Nifty. Tata Motors, Tata Steel, Kotak Mahindra Bank, TCS, all these heavyweights lifting markets. Tech Mahindra and Cipla are some of the other gainers. BPCL also contributing today is what we've been tracking. You got HUL once again. In fact, just try and pull up HUL 1 month chart if you can get that going for you. That one's been the big outperformer in this entire gain that we've been seeing. But, Mehrab, any thoughts when we talk about HUL? I mean, fair enough, not on a stock-specific basis, but even as a sector, is it more the fact that we're seeing that classic rotation of sectors and preference take place here? What do you make of the consumption pack?
Yeah, I think the consumption is looking interesting. If you see this oil price correction, it is resulting in actually almost 10 to 15% raw material price decline for most of these FMCG companies which depend on oil and oil derivatives. So I think there will be a substantial increase in their EBITDA margin. Obviously, they will transfer, there may be some price reduction, but I think the margins are improving, and that is what justifying even the current high valuation for these stocks, and I think they will continue to perform good in 2015 also.
Alright, so that's as far as that space is concerned in terms of what's really happening there. Oil and gas, Mehrab, is that because that's been the big story of 2014? Is that something that you would like to play in 2015 as well?
Yeah, oil and gas has been a story because it has, people are expecting a lot of reforms in this sector and the government to take action. However, I think we have to, when the oil prices corrected substantially, which nobody was expecting, say, 1 quarter back. And also we have to still get clarity from the government regarding actually the subsidy sharing, etc. So unless that happens, I think global investors are slightly concerned at this point of time.
Alright, so that's as far as the oil and gas pack is concerned as well, and what we're seeing right now in terms of the way developments are shaping up there. Alright, mid-cap seem to be cheering a little bit today. Take a look at that 1% gain coming in as far as the mid-cap index is concerned. Mehrab, a market call here, is this, I mean, we saw that Tuesday crack coming in. It took everybody by surprise in terms of the magnitude of the fall. Was that just a one-off? Is the confidence back in the market, or, will we see shorts once again start getting active at these kind of levels?
The shorts can anytime get active. We have to understand that we are coming out of more than 30% rally in the market. And even if you take the example of 2003 to 2008 bull market, when the Sensex went up from 3 to 21,000, even during that big bull market, there were at least two instances, one in 2004 and 2006, where market fell by more than 30% in a few weeks. So the correction can always happen in a bull market. However, we have to remember that this is a bull market. The economy is substantially improving. There is a new government in the space, and everything is track. It will take some time to happen, but we have to have confidence. And I think if somebody invests during market falls in good stocks at good valuations by good management, I think they are going to make a lot of wealth over the next coming few quarters and years.
So this continues to be a buy on dip market. There's no concern, there's no change in that strategy at least.
No, I don't think so. It's purely a buy on dip market.
All right. You mentioned about the housing finance company is one of your top themes. In fact, we were in conversation with Rakesh Jhunjhunwala just a few days back. He also mentioned the fact that that's one of his top themes. Why so much excitement? What seems to be working when we talk about this space?
Yeah, you see the housing finance, we all know that India clearly requires lot and millions of housing units, and now the prices in a lot of these cities and metros and even tier 2 towns had gone up irrationally over the last few years. However, I think the prices are now stabilizing. The demand will over a period of time slightly come out. If the confidence economy improves, the confidence come and people's job expectations also improve, I think people will be more inclined to take loans and buy houses, and also the interest rates are expected to finally come down in the coming year 2015, in the current year. So I think this sector is on a very sweet spot, and there are a lot of stocks which are interesting over here.
All right, so that's the big mega theme as far as housing finance companies are concerned. Mehrab, we're building up to budget with around a 1.5 month period left there. Is the pre-budget rally in place? Is this something that the market can still work towards?
Yeah, I think the pre-rally rally is already going on, and I think we will build up more expectations towards the budget. It is going to be the first real budget of the new government, and I think the markets are very enthusiastic towards it, and the pre-rally will continue.
All right, Mehrab, always a pleasure talking to you. Thanks so much for stopping by today, getting a thoughts and perspective in terms of markets and the reading going forward. That's the view coming in from Tata Investment there as to how they're reading into all the cues and the action there. But just